because you can see the swing high here, right? The swing high here. But for this entire portion here, from which price broke market structure, this was your last sell side delivery. It had large body, and then these don't matter because it's all wiki, it's all wiki, right? So there's more sell side delivery that's happening over here. So this here is your last sell side delivery, and you draw that out here. Now the next part is context. Do we have the proper context? So let's see if we have the context. So go 15-minute chart. It was this, yeah, this one. So it's up, unmitigated portion of this big order block, which is stuff that we already know, or you can call it this as well, the unmitigated portion of this order block. So where's here? That's your sell. That's your buy. My bad. That's your buy. Okay, that's your buy. Even though it's not in the correct time of day, you can just observe the buy or put it on demo. This is your buy to go where? To go where? Here. Why? Because this is buy side liquidity, equal highs, relative equal highs actually. Yeah, relative equal highs. Okay, that's the low resistance liquidity run. Okay, that's the low resistance liquidity run. Uh, yeah, so that's pretty much it, from which you can determine when order flow changes, and what you can do to catch the move. And see, price respects this, goes higher, and what's formed over here? We have a swing low forming, and then it breaks structure, right? Swing low forming, boom, break structure, making this a strong low, right? Strong low. So when what happens when a strong low is broken? Boom, boom, bada boom. Not downside movement, sharp upside movement, like I've told you guys. So sharp upside movement, take out this high. Okay, that's the change in the state of delivery. Okay, this is stuff that I look out for on a daily basis. So here is, if you want more examples, here is a change in the state of delivery. If this order block was not here, then this reaction here would have been a sustained reaction down. Okay, what else? That's pretty much it on this chart over here. That's pretty much it, right? So your changes in the state of delivery in this particular chart, right? This particular piece of price action is here, 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 right? So all these changes in the state of delivery, right? And you can also say this part over here, but it did not hold because of the 1 hour order block. That is a change. Now we have to bridge the gap between understanding a change in the state of delivery to a shift in market structure, right? So, but that now we have to understand what's the difference between a break and a shift. So let's say you have order flow up, okay? Now order flow up, and then you have bullish structure, right? This is a break in market structure. Break meaning it's breaking to go higher. Okay, break meaning it's breaking to go higher. Then what about while having bullish order flow, you take part in sales like this? These are shifts in market structure. It's shifting. It's shifting to meet temporary targets. Okay, it's shifting to meet temporary targets, or market structure is shifting to meet temporary targets, creating what? Creating liquidity along the way, right? Creating liquidity along the way. It's shifting market structure in order to create liquidity, as you can see here. See over here, breaks, liquidity created, breaks. My bad, shifts, liquidity created, shifts, and then comes to a particular point of interest and break, break, break. And now what's happening? It's potentially shifting. It's shifting structure. Okay, so break in structure. Now this is just theory. You don't need the practical application, but it's simple, right? So for example, this here, this here, this here is a shift in structure. Down we go. So when you need the shift in structure first. You need the shift in structure first before you look for a change in the state of delivery. All right, you need the shift in the structure first before you get the change in the state of delivery. So step one, You need to get your shift in market structure. Then you need to get your change in the state of delivery. This is the order. It's not one way or the other. Okay, it's only in one order. Don't try to switch it up. This is your order and stick with it. You get your shift in market structure first, then you get the change in the state of delivery. For what? Counter trend moves. Okay, counter trend moves. Then what about pro trend? Meaning when you're trading with the order flow. When you're with the order flow, you want break in market structure first, right? To want to see change in the state of delivery. So this this here is a break in market structure. This here is a point in which there was a change in the state of delivery. Okay. Uh, Here is your. Let's look at a proper example for the other one. Here. Okay. Here is your shift in market structure. Shift in market structure. Here is your change in the state of delivery. This one. Change in state of delivery. Here is your shift in market structure. Here is your change in the state of delivery. Okay. Then here is your break in market structure. Right on the 5-minute chart, here is your change in the state of delivery. That went down because it needs to generate some liquidity. Okay, so those are like variant scenarios, right? Here is your break in market structure. Oops, your break in market structure. Now where is your shift? Not shift. Where is your change in the state of delivery? That's the thing. Where is your change in the state of delivery in this case? Right? In this case, where is your change in the state of delivery? Ideally, it would be this one, right? So let me just take this out. Ideally, it should be this one, right here. Right now, the reason why sometimes it may not hold, okay, is due to the fact that it needs to what? Take out engineered liquidity. Okay, only if it does not hold. If you see that it does not hold, then that means it's looking for engineered liquidity. Is the BMS towards the HTF order? Yes, BMS is towards the HTMS, towards the HTF order flow. SMS shifting market structure is when you're trading against high time frame order flow. That's a shift. When you see the shift, you are confident in taking the sell or a buy. Okay, so that's up to your testing. SMS is counter trend. Yes, correct. Okay, break is with order flow. SMS is against order flow. All right. Uh, then you can apply this fractally, obviously, from a fractal standpoint. So, yeah, SMS, BMS, and C changes CSD changes state of delivery. Is everyone with me? Everybody? Yes. Yes. All right. What about the rest? Am I recording though? Yeah, yeah. Okay. Okay, I am recording. Okay. Right. Let's get to the. No, I had to watch again. Ah, shit. Okay, no. Just tell me what do you not get? What part of it do you not get? Just if you can tell me, so that everyone benefits as well. We replay to a market as it unfolds quick. That'll be hard because then I need to mark all the high time frame stuff. So using what happened today, I can show you because like I say, it's an understanding, right? So with that understanding, you need to have everything already on your chart to do it properly. Okay. Right. Right. Okay, so can I move to the next part, the liquidity thing, everyone? I have permission to move to the liquidity part? Yeah. Okay. Okay. Right. Now here's how it is. Uh, and you see, if I zoom out, where's my mouse? Okay, here. You can see that every time. Remember the study I asked everyone to do. Study the high when price breaks a high, reaction from there, breaks a low, reaction from there, right? You see, now you know that order flow is bullish, right? I'm using this as an example only, but I'm not going to go into detail until we get back into algorithmic stuff. So you understand that order flow is bullish. Okay, now with this understanding that order flow is bullish, see that sometimes when you see scenarios like let's say for example damn, it's hard to find examples. Because I saw it today. If I saw it today, then it must be on a lower time frame, maybe about 5 minutes. Okay, here you go. Right now, you see here, right, over here and over here, price follows this. Now here's the algorithm, not algorithm. Here's the algorithmic steps, right? The price needs to make. Now this is not to say that it's part of it is this is not to say that it's not part of the algorithm that I gave you guys, right? It is part of it, but then it cannot be explicitly written down. Okay, it's like it needs to click. You do your work on the chart, and when you see a certain thing happen and when you see a certain thing not happen, it needs to you need to ask yourself, okay, for price to go up, what does it need to do? For price to go down, what does it need to do? I remember I said from once or twice or maybe 3 or 4 times, in order for price to go, from my observations, in order for price to go down, it needs to go up. Okay, so for step 2 to happen, this needs to happen. Okay, then if you want to see price go up, it needs to go down, right? So this is step 2, this is step 1. So what does that mean? That means this here is a bearish scenario and this here is a bullish scenario. Now this also lends to the anatomy of a swing, or the anatomy of every swing in the market. Now if you understand this, then if you literally go back in time, if you go back in time to today, right, to today, you could have sold here, you could have bought here, you could have sold here, take profits here, you could have this morning, for me it's morning, you could have bought here, roll it up, you could have sold, bought, and you could have done all of that. Okay, you could have done all of that. But did I do it? No, because I need more practice. Okay, so it's a tricky thing. That's why it's a very tricky thing. That's why I told you guys the high frequency trading thing, it relies on this. Not relies. Yeah, the understanding of it relies on this. The only way you can catch up and down moves is by understanding this. Okay, which is why I said I'm not going to talk about it just yet. I need more time to collect more data. Okay. So, like I said, to go down, to go up, right? To go up, we need to go down. So see, right? See, now I remember I just said we until we meet that particular point of interest, price will typically trade within a dealing range, right? So let's just say that this is our dealing range, this low and that high up there. Now, in order to tackle liquidity here, liquidity here, liquidity here, right? Which has already been done, by the way, apart from this one, price needs to take out what? Sell side liquidity in order to take out buy side liquidity. I'm just going to leave it to you at that, nothing more. Okay, price needs to, let me write it down. Price needs to, in order to get to buy side liquidity, it needs to go from sell side liquidity. Okay, sell side to buy side. Then in order to get to sell side liquidity, what is price going to do? It will take out buy side liquidity first. You see now, I'm getting at buy side, sell side. Okay, so to get to buy side, price takes out sell side. Boom. Okay, to get to sell side, price takes out what? Buy side. Here. Then here, you see what happened here? What happened to this swing low here? What was created below this point? Sell side. Sell side, right? What was price taken out as it went up? Buy side. Buy side. Price took out buy side and it came for sell side. You see what I'm getting at? Right? Every time liquidity is taken from either side of the market, there is a tradable bounce somewhere. Now, looking at it on the 5-minute chart is useless, but if you look at it on the 15-minute chart, then it's very good because 15-minute chart gives you data on previous days highs and lows. No? So that will give you your tradable multiple tradable bounces within a day. Not that I'm telling that you should do it, but if you want to practice that, then go ahead. Okay, so that's the simple understanding. So it's you need to blend it in with the algorithm in a way, because the number one thing is, right, the number one thing is, without context nothing works. Nothing works at all. Without context nothing works. I could I've seen on Instagram, from my country, there's this one guy that started a crypto mentorship or course sort of a thing, right? Course sort of a thing. They have no underlying, how can I put this? And I know because my friend just went to check that out, see whether it's anything comparable to what I do, right? And so what he said was, all they do is use RSI, moving average, blah blah, blah, right? And uh, when did this move start? This move over here, this, I believe it's this one. This one. So this here is obviously the start of a bull run, right? Here, but we know that there's something bad coming soon, right? So what he told me was, the guy who is teaching them or whatever is basically advising them. Now, number one, that's illegal because he doesn't have a certified financial that certificate to advise, right? And they post screenshots of the members or students or whoever, saying that, thank you for telling me to buy this, for telling me to do this, for telling me to do that. So it's more of an advisory than a course sort of a thing, right? But the point is it's all driven by indicators. It's all driven by indicators. While obviously, no, we know that the oil flow is bullish, but now that's the context and narrative. But once it gets here, okay, once it gets here, and I'm not saying the biggest move will start from here, but it could be a sizable move from here. When it gets here, right, and if they were advised to buy somewhere here, which is obvious, which is an obvious target, and also here as well, by the time price drops, the moving average will still say that it's a buy, right? Moving average will still say it's a buy. Yes, it will bounce off this propulsion block, right? It will bounce off this propulsion block after it goes higher, but what's going to happen next? all gains gone. So my point of the story is this buy over here at a later point of time, hypothetical scenario, obviously, because it could, Warren could come back now over here. Uh, the point is, if it goes up here and there's a significant order flow change, right? What's the context? Bearish. Will this work? Someone tell me. Will this work? While the moving averages and whatnot, RSI, blah blah blah, when all that flash bullish signals, will this particular bullish signal work after coming from up there? Rest? What about the rest? No, right? Won't work. So that is the context. Without context, nothing will work. Right? Without context, nothing will work. Right now, or these past few days, they've all moving average crossovers definitely worked. So what does that mean? That means that they are set up to fail, right? Trendline liquidity. Moving average is a trending thing, right? So trendline liquidity, they buy here, their stops here, buy here, stops here. And in the context that we'll be getting from here or above over there, it's a one-way street down here. Taking all of them out, and then you see those people stop posting reviews. All right, so we have that. What's the blue dots? Blue dots. Oh, yeah, it's my way of doing a higher time frame PDA, because like highlighting a box is like, I don't know, it just felt off to me for some reason, so I just put the lines. Okay, so like I said, buy side to sell side to buy side. That's how you can catch up and down moves. Now, while price is one directional, okay, while price is one directional, expect it to trade within dealing ranges. Once dealing ranges are broken, expect maybe one or two more dealing ranges to be broken. So that is something that we'll discuss later on. Once everyone, not only you, me also, once we all progress further with the algorithm. Okay, uh, right. That's pretty much it, guys. So today's session was quite short, but it was to the point. Shift in market structure, change in the state of delivery. If you did not get it, I understand it is hard to get it, because there are confusing factors in between the break in market structure, shift in market structure, right? So go through this video and stop when I say a shift in market structure is a market structural shift against current order flow. A break in market structure is a shift in is a okay, you can say is a market structural shift to in the direction of current order flow. Okay, then the way that price moves up and down, right, moves pro trend and counter trend, and how you can get in those moves is by knowing where the current drawn liquidity is, what your current interbank dealing range is, because it's going to trade within that. Okay, it's going to trade within the current dealing range, right? And you're going to trade up and down inside of that. Okay.
Sean.
Yeah.
Hi there. Would you, just for the purposes you are recording this, I noticed you said earlier, you said with regards to counter trend, SMS then CSD, but you kind of drew it in the opposite order. Would you be so kind again just to go through those last couple of steps when you're doing counter trend? So you said shift in market structure, then a change in the state of delivery. Would you mind just going through that again, just on the chart, so it's on video, so we can go back over it?
Yeah. Okay. So we, for example, today's one, we have here, we have the shift in the market structure here, right? And this is your change in the state of delivery. So essentially, even though we see this, right, the change in the state of delivery is confirmed by the shift. Okay, the change in the state of delivery here, let me just write it down so everyone can see it later. I'll call it CSD, so change in the state of delivery here, and the SMS. I think I have a template, yeah, and SMS here. So we have a change. Let me type it down as well so everyone can get it. That's my text box. Here you go. Okay. So to confirm, here you go. So another example would be change here, change in state delivery. Sorry, shift in market structure. Sorry, shift in market structure here, and buy side here. So this is your validation of the change in the state of delivery. Okie dokie. So here you go. And yeah, so that's how it works. You confirm your change in the state of delivery, or you validate it by seeing a shift in market structure. And as long as the liquidity points or the liquidity has not been reached, price will tend to go there, because in order to uh, take out buy side liquidity, it needs to take out sell side liquidity. So we know that this sort of a scenario here, over here, this low and this high over here, it's not much of a trend line scenario, right? Yes, it is a trend line scenario which price does take out, but at the same time, we know that it won't just stop there. It will definitely take this out as well, because price will not react at equal lows, relative equal lows. So here, right?
And my last question, if you don't mind,
Yep.
I'm sure about a week ago, give or take, that when you was talking about changes in state of delivery
Uh-huh.
on the lower time frame, you were talking about imbalances around these points here.
Oh, yes.
Is that in the scope of what we're talking about now, or is this going more algorithmic?
That would be when we speak about the algorithm.
Right. Okay. No problem. Cheers.
No problem. Okay. Then.
Is it safe to say that every time if we're expecting for price to go bearish,
Uh-huh.
every time there's a break of structure to the downside in a retest, that break of structure would be the SMS, which is which is SMS. I forgot what you say. I forgot what the name of it is, but basically a break of structure in a retest of
Last buy
the
side.
change of delivery.
Yeah.
So like like it'd be like a break of structure and a retest of the change of delivery.
Yes, sir.
And like but the retest, the change of delivery will be located usually at the area where you have a up and down candle.
Yeah, correct. And the up move needs to have some body to it, because the body only represents order flow.
Got you. So the up move in a bearish, which we're trying to find a change of delivery in a bearish bias, should have a volume candle.
Exactly. Yeah.
Okay.
That is
So I
right.
appreciate that, Sean.
Yeah. All right. Okay. Hold up. My glasses off. Okay.
I'm gonna have to practice that a little more, but I'm kind of getting the gist of it. I appreciate the time and effort you put into explaining it to us.
No problemo. Okay. Could you show the direction of SMS CSD on the side identified? Right. SMS is down to the downside. So I mean, there's no direction in a way. So I mean, if price is breaking down in bullish order flow, it's an SMS down. Change in the state of delivery is the bullish move here, right? So I'll do something. I will take a screenshot of this. Take out this. Copy and let's put it here. Okay, so have a look at that, right? And check it out. Okay, because what I can tell you is SMS is against order flow, and change in state delivery is the last point of old order flow. Okay, which has some nice volume to it, because that is where the actual last the last point of either buy side or sell side repricing has occurred. Because if you look at the change in state delivery here, right at this point, just above here, over right here, which price pierced, which was an immediate rebalancing. There was nothing else offered above this point. Yes, it can go, by it can spike a pip or two, but above that, there is nothing that's offered at that point of time. At that point of time, until price seeks sell side, finds orders, or the price engine kicks back on over here, and now it's seeking buy side. Okay, and now see over here, there's no complete run up. This will be a break even. Price will most likely come here. Yeah. Okay, that's the scenario with how you should be doing this. So number one, remember, always context is key. You need to trade within the current context. And I don't believe I showed it to you guys, but let me check if I showed you guys how you should be doing stuff. Let me get my OneNote. There you go. Oh, sorry, this is my university stuff. Okay, here. Right, so something like this. Okay. So, for example, high time frame perspective, order flow, which is for me 4 hour. I look at the order flow on the 4 hour. I put my reasoning. Okay, put my reasoning for what I'm seeing, and this was Euro USD. So dealing range high, dealing range low, unmitigated order block, blah blah, all of that, right? So I know that the order flow is bearish. Okay, I know that the order flow is bearish. Then HTF perspective, dealing range identification, because we always need to know the dealing range that we are trading within. So we have this dealing range high. It was not this one, I just kept here for convenience, but it's this dealing range low. So why is it dealing range high, dealing range low? We have stop hunt, up and breakdown. So which is a bearish range in nature. Okay. So here's my reasoning. Previous day sell off takes out sell side liquidity here inside of the dealing range, and should therefore trigger a move up for rebalancing purposes. So see, sell side taken. What is it trying to do? It will try to take buy side here. Okay, it will try to take buy side. However, there is an obstacle of a shift in market structure and an imbalance over here, which could lead to a tradable bounce down into more sell side liquidity, because now we have a scenario of relative equal lows, right? Scenario of relative equal lows. So price will go here and try to take the relative equal lows. Or we go to my execution part. Yeah. And this was that day, right? That day we took the sell, we took the buy, and took the sell over here after suffering over here, right? So London Open played well into reaching the previous day's order block and filled in the imbalance, leading to a tradable sell-off, taking out the dealing range low, the one that we were looking for price to take out. Took it out, and then what? It takes out sell side liquidity. Now it needs to take out what? Buy side. So now how is it going to take out buy side? Look up here, here. After that, what will it get into? Unmitigated order block and previous day's high as well. So here you go, unmitigated order block, previous day's high. There was a buy over here. And see, notice I use shift in market structure here because why? Because order flow is bearish, right? Order flow is bearish. This is shifting market structure in bearish order flow. Okay. Unmitigated minus OB, price reacts nicely, and down we go. Okay. London took out the dealing range low. Price now see, look at my reasoning, right? It's everything I'm telling you guys. Since London took out the dealing range low, price needs to take out a short-term high in order to continue sell side delivery. This is done by taking out Tuesday's high and reacting from the unmitigated portion of the H1 order block. Okay, then if you go to the next day, the one that we had fun going up and down, up and down, up and down, that one. Uh, I did not manage to put the comments on this here. I had to do it. But if you look at this, we are still in what, bearish order flow, right? Bearish order flow. Now H4 shift in market structure indicates that the order flow is still bearish. Now this here, right? This over here is something that we'll speak of later. If this is something that we speak of later, so please do not think of this as anything, right? So forget about that. So we have dealing range high, dealing range low. Here's your what? Change in the state of delivery. Here's your minus OB for the 4 hour. Okay, now I played forward the next day, and here it is. OB tradable bounce down. See what it did? Because sell side, right? Now what is it trying to do? It's trying to take out buy side. Where's the buy side over here? There's no low resistance liquidity just yet, right? So the immediate buy side is here. So it will trade up in and try to fill in the imbalance and drop. Okay. Now what did it do? It took out more sell side, right? Took out more sell side. Now after taking more sell side, okay, after taking more sell side, it needs to take out buy side again because it doesn't have that catalyst, right? This order block here should have provided the catalyst and given you sharp moves down, but it didn't. So you need to think to yourself, okay, now what do? I need to wait for what? The shift. You get the shift, you come to the change in the state of delivery, and it goes higher. And it's also in a breaker. Okay, it's also in the breaker. Then what happens here? Price comes into the change in the state of delivery on the 1 hour and 4 hour. There's a little stop hunt, and this is the sell that we all got in that day. And then of course it went up and then dropped again. So look at this. We took out sell side here, and where was the obvious spot in which buy side was going to get taken? Here, right? Obviously over here. Now although this price action is logical in a way, there's not enough volume in terms of manipulative volume to anticipate price action like that, right? So we waited in New York. So New York comes, or we go into New York. Price goes up into change in the state of delivery, and it just drops off. Right? So this here is a break-in market. Sorry, this here is a break-in market structure. Price drops, returning back into the breaker. Okay, returning back into the breaker. That's the cue for you to sell it off. Now notice, if you just look at price here, where my cursor is, right? One would expect price to, okay, it's going to go up, it's going to go up, it's going to go up, it's going to go up. But you see this massive sell-off that they just out of nowhere just dropped. Why? Did it take out any liquidity over here? No. Right? It did not. So it needs to engineer liquidity by doing this. Take this out and then go higher. So now see, takes out sell side, it seeks buy side. That is how price moves. Okay. Then once we dig deep into further algorithmic stuff, I'll show you guys something else. Okay. So for now, just focus on what you know. Don't overcomplicate stuff. First, know the models like the back of your hand, and once that happens, only we can move on, right? So anyone have any questions? If not, I am done for today's session. So anyone?
Exact engineering dynamics.
Okay. Okay, I shall. Oh, yeah. Will you send the notes? These notes? No, these are not notes. These are my daily log entry. My daily log entries.
Hey, Sean.
Yeah.
I was doing a little bit of homework that you assigned us and things like that, and I kind of came across a ideology. I don't know whether it makes sense or not, but I'm gonna just throw it at you.
Okay.
Does a mitigation block
Uh-huh.
is somewhat a low resistance liquidity run? just like how you say like the HR, the high resistance liquidity run is a breaker.
Yes.
Is it
correct.
safe to say that the mitigation block is a uh a L a LR?
Yes, you're right.
Oh, good. Thank you. I knew I had a moment. Appreciate it.
All right. Okay.
Can you kind of like show if you can, right? I know we're recording, but can you like show that an example of the like the how that correlates to mitigation block versus using the LRL?
Here, this high, this lower high. So we have mitigation happening right here. When price tackles it, it mitigates. But since order flow has shifted, it trades through it. That's how. So
Hmm.
essentially, if it like if this was instead of the 5 minute, this was the 4 hour, then that was definitely a big tradable bounce here.
Gotcha. So basically, like there's your there's your week. That'll be a week high, right?
Yeah,
Okay, then since this would be the mitigated area, the unmitigated area or mitigation block, right?
that's the mitigation.
And like what happens is it'll have a strong low. I mean a strong a strong low in which whenever it takes out this, it runs and collects
The liquidity.
all the liquidity because this is a LR.
Yep, correct.
Okay, perfect. All right, thank you, Sean. I really appreciate it, man. I really do.
Okay. Then models, are these the induction models? The one I just showed you. No, the one I just showed you is all. It all basically supplements the algorithmic models, right? So that's pretty much it. We will dig deep into the algorithmic stuff, like, and when I say dig deep, I mean no other topics and no combining things together. We speak about one aspect at a time. That way it helps everyone to practice. Okay, so that's pretty much it. Does anyone else have any questions? All good. Okie dokie. All right then, can go back to finishing this freaking uh, stuff over here. Okay. All right, guys. I shall see you guys tomorrow. Live market conditions. Okay. I'll send the recording. Let me stop recording.